GDP at end November 2025, coming down from 63.1% a year earlier. Now, in the banking sector, the sector recorded a strong performance last year. Total assets increased in the year, driven by growth in domestic deposits, domestic borrowings, and shareholders' funds. The asset growth was primarily reflected in investments, which increased significantly. The latest financial soundness indicators show that the banking sector was solvent, it was profitable, and it was efficient. The non-performing loans, or what we call the NPL ratio, improved to 18.9% in December 2025 compared to 21.8% in 2024, although it remained elevated. Ongoing policy measures that are aimed at resolving legacy loans, enforcing strict credit underwriting standards, and addressing willful defaults are expected to further improve asset quality. The easing of the policy rate is expected to support credit conditions and strengthen financial intermediation going forward. Next is the external sector. The sector recorded a robust performance. The year ended with a provisional current account surplus of 9.1 billion, and this was up from 1.5 billion in 2024 and was driven by strong gold export earnings, increased private transfers, and moderation in the services and income payments. These developments, together with high capital inflows, resulted in a provisional balance of payments surplus of 3.98 billion. Gross international reserves increased as a result to 13.8 billion US dollars, equivalent to 5.7 months of imports cover, and this was as at the end of December last year. You can compare this to 9.1 billion, or equivalent of 4.1 months of imports cover at the end of December 2024. Improved reserve accumulation provided the buffers for the local currency. The cedi strengthened against the major trading currencies in 2025 and has remained relatively stable in the first few weeks of 2026. The currency's strong performance reflected favorable global conditions, prudent monetary policy, effective liquidity management, and significant reserve buildup. In 2025, the cedi recorded an appreciation of 40.7% against the US dollar, and this is compared with a depreciation of 19.2% in 2024. In taking the policy decision, the committee, the MPC, acknowledged that macroeconomic conditions have improved significantly. This was supported by the tight monetary policy stance, fiscal consolidation, and significant buildup of reserves. Inflation has declined faster than anticipated. Expectations remain well anchored, and growth has strengthened. With stability largely achieved, the focus of policy now is gradually shifting toward consolidating these gains and supporting stronger real sector recovery, job creation, and improved financial intermediation. The latest forecast and 6 months ahead survey-based inflation expectations, which we monitor, these indicate that headline inflation is broadly expected to be within the medium-term target, barring potential spillover risks from upward adjustments in utility prices and commodity market volatility. GDP growth is expected to remain strong in 2026, with the output gap narrowing. While this may introduce moderate demand-side pressures, the committee, that's the MPC, judged that current monetary conditions do remain tight relative to prevailing inflation dynamics. Sustaining Ghana's macroeconomic gains will hinge on disciplined fiscal policy, strong policy coordination, and targeted agricultural interventions to contain food inflation while remaining vigilant to heightened geopolitical tensions. Based on the foregoing considerations, the committee, the MPC, by a majority decision, voted to lower the monetary policy rate by 250 basis points to 15.5%. The committee will continue to monitor developments closely and take appropriate policy actions to ensure that the gains from macroeconomic stability are translated into sustainable growth. The next monetary policy MPC meeting is scheduled for March 16 to 18, 2026. And that meeting will also conclude on March 18, 2026 with the announcement of the new policy decision. I thank you for your attention.
Thank you very much, Governor Dr. Johnson Pandit Esiamam. This is the 120th MPC press briefing, and we just listened to the decision of the Monetary Policy Committee by the chairman. The rate is due by 250 basis points, and the chairman gave us the underlying reasons for this rate cut. We also live on Northern Reports, Ghana Web, NFT, and other radio stations, of course, right on our social media platforms, Bank of Ghana. So we go straight to what we normally do, and colleagues, keep it short, keep the narrative out of it, and just go straight to your question. Yes, so Northern Report. Thank you.
Thank you very much, Mr. Governor. Certainly, gold as it is has been one of the anchors in our stability story from what we've just heard from you. And I want to find out from you because when you attended the Public Accounts Committee sittings recently, you undertook to provide Parliament with information on the cost implications of the Gold for Reserves program. I want to find out from you today, have you fulfilled this commitment? And if so, could you share those details with us?
Right, so let's have Lord.
The microphone is. All right. Thank you very much, Governor. My name is Lord Nati. Governor, the 2025 financial year has ended, and now that your accounts are yet to be published, what should Ghanaians expect from that publication, the impending publication? What should Ghanaians expect?
Thank you, Lord. Yes. Now.
Okay, thank you, Governor. Now, my question is on the January 2026 summary of economic and financial data. So, Governor, the gold holdings as of December 2025 was 18.6 tons, down from 30.5 tons in December 2024, and even down from September 2025, which was 37.1 tons. Why the sudden drop in the bank's gold holdings, and what is the rationale behind it? Does it have to do with the rebalancing of the FX reserves portfolio?
Yeah, thank you. Yes, Toma.
Good afternoon, Governor. My name is Toma Iberi from Corporate Guardian Magazine. Now that you are shifting towards supporting growth in the real sector, what is your policy for liquidity in the economy as measured by M2 plus, that is money supply growth, which you kept tight last year to combat inflation? Are you not worried there will be a situation where if you ease liquidity to support growth, it will not feed into cheaper credits for cheaper forex now that you've achieved those things? And secondly, the other related one is what is the bank policies or planned policies for making sure that this good foreign exchange position that Ghana is now in goes into restructuring of our production processes to improve local value added rather than just import of more consumables which have become cheaper? Thank you.
Toma, can you repeat that last part? I lost you somehow.
Oh, sorry. The second part was, what policies is the government the Bank of Ghana putting in place to ensure that the forest that it provides itself onto the market is used primarily for restructuring of production processes to increase local value added in our production processes, rather than just importing more consumables for which there are imported, for which there are local substitutes, so that we actually have some structural gains from the good forest position we're in now.
Yes, thank you very much. Mr. Governor, we've had 5 questions, so then we can proceed with that.
Okay, so as usual, I like to take the last one first. What policies, whether Bank of Ghana has a policy to prioritize our FX intermediation? That's what you're asking. That we should be going more for intermediate goods, etc. Yes, that makes sense. But you know, what we have is a market-based system. Banks, we auction FX to the banks. And so based on your documentation, your bank will effect your transfer for you. Now, when we look at data on our balance of payments, it suggests that intermediate goods imports are holding very strong, and so that is encouraging. But yes, I agree with you. We should be moving less of consumption, imports, moving much more towards intermediate and capital goods imports. But as to whether we should be targeting these from our end, I'm not sure. However, the data shows that consumer goods imports are lower than the intermediate goods imports. The director of research is here. If you want, he can show you more detailed on that after the press conference. Then the next one, our easing, whether this will not fuel cheaper credit and others, and inflation. Well, no. If you notice throughout the policy statement, the MPC statement, we kept talking about tight monetary policy conditions. Throughout last year, yes, we were easing. However, we were sterilizing at the same time. And if you look at the data in terms of sterilization cost, you see that we were not loosening the anchor, even as we were easing. That will continue to be our policy stance. We need that stance to be able to hold and protect the gains. But that said, you also need to support real sector growth. And it is encouraging. We are beginning to see banks move towards lending to the private sector. We are seeing some reduction when it comes to lending to the public sector. That is encouraging because that is real financial intermediation. That is what supports growth. And we are seeing that sign. What the MPC is doing here is to reinforce that transition. It's good for growth. It is good for poverty reduction in the end. Then there was one other question. The gold holdings going down to 18.6 tons. At the last MPC, I remember we spoke about a rebalancing of our portfolio. And what we did was to look at our peers, our peer countries. We observed that most of them were holding between 20 and 25% of their portfolios, as gold. At the time, we were holding a little over 40%. And so decision was made to diversify, and that is what you see. But the FX that was earned as a result is there. It is earning, dividends. And so it is contributing to reserve accumulation. And so no worries at all. And as you are aware, we are building all the time. We are rebuilding all the time. And so this year we will reaccumulate once again. We'll be down to that level. and we will ascertain, we will evaluate whether it will be optimal to hold it at those levels. And maybe let me just clarify. It is true gold prices have risen to record levels, way above 5,200, I'm told. You have to understand that there are several factors that drive gold prices. Some of these factors are transitory. Some are structural. Now, what you see at 5,200 may be more of transitory factors. It may not be permanent. And so you have to be conservative in your assessments. So we will be guided by what will be optimal based on the structural considerations and determine the appropriate levels of holdings that we want to go for. But let me add that our reserve accumulation is upward. Nothing has come down. It was just a rebalancing that we did. Then the next question was on the 2025 accounts, how it is turning out. Well, as you are aware, we have our mandate. And you also know that the Bank of Ghana is not a profit-making institution. Our mandate is to ensure price stability. Our mandate is to ensure financial stability. Now, in carrying out this mandate, yes, you will incur costs, but then that cost has to be put in proper perspective. And so you will see in our accounts when it is published that, for example, the cost of monetary policy operations, is quite, significant. And then you also have things like revaluation costs, they are also there. And not to talk about our good friend, the gold-related expenses. These are legitimate costs that you incur for the public good. But that said, we are in consultations, just as I mentioned at the PAC meeting when I went there. We are in consultation with government, with the Minister of Finance, and you would have heard that when we amended the Bank of Ghana Act recently, there's a provision in there for government to recapitalize, the Bank of Ghana from time to time. And so government is committed to recapitalize us, or more or less to strengthen our balance sheet, going forward. And so rest assured, we will ensure that we remain policy solvent. We will ensure that we are committed to a mandate. We will ensure that we serve the public good. In so doing, there will be cost. But government and the Ministry of Finance, for that matter, will do its part to help shoulder some of those costs. Now, the gold, next one was on PAC, regarding some data that was required when we went to the Public Accounts Committee. Rest assured, the PAC chairperson was asking to see some explicit data in the accounts, but those data were captured in other areas in the report. And so we have provided those numbers to them about a day or two after we left there. If you want to see the details, I encourage you to approach the chairperson of PAC. They'll be able to share with you. But as far as we are concerned, that issue has been addressed, and that is behind us. Bernard, I think that is the end. I think I've answered all five.
Yes, Governor, that's the end of the
so we
first
can
round
go
of
on to the
questions.
next one.
Yes, please. Right, so we're also live on Joy News, and if you've just joined us, this is the 128th MPC regular meeting press briefing, and the monetary policy rate has been lowered by 250 basis points to 15.5%. And you just heard the governor explaining a few questions that have so far come up. So the next round of questions, 5, 8, yes, go ahead.
My name is James Echeno with Joy News. Now, with this cut, Governor, I want to know, we've seen the CD depreciate, seen the marginal depreciation by some 4% in the month of January. My question is, should we be worried based on this? And also, should the market interpret this cut as a beginning of a sustained easing cycle?
Yes, thank you. Please go ahead. Bloomberg.
Can you please hear me? Yeah. All right. Thank you, Governor. I wish to ask as a quick clarification on the bank's gold holdings. If you say you diversified, does it mean you sold the gold for cash? That's my first question. My second question, last year you introduced a new FX intermediation where you sold dollars on the spot market to market players. But some people are complaining that the allocation is not based on the highest bidder principle. Is that a case, and what is the strategy behind it? And number two, right now it looks like none of your instruments are linked to the monetary policy rate. The 14-day is around 14.5%, and overnight rates are being placed at 14%. So you look at the gap between the policy rates and your instruments. What is the strategy behind it? And are you concerned about policy transmission? Thank you.
All right.
Good afternoon, Governor. My name is Morris with GTV. So with your latest rate cut, will you say that you are likely to, earlier than expected, achieve your target of reducing interest rates to not more than 10% by the close of your tenure? Thank you.
Mr. Governor, I think we've had 5 questions.
Okay.
Moses decided to take other people's questions by giving us 3. But he's forgiven.
But can we have the last one again? I lost the last one.
Right. He's saying that with the policy rate cut, are you on course to achieve your target of 10% lending rate? Yes, please.
Right. Then maybe I should take that one first. So, yes, we are very much, and let me explain that is not an official commitment. That's my own personal, wish, my personal aspiration. Why? Because I have seen very high lending rates all my life, from when I joined this institution in 1995. Lending rates have always been extremely high. It is my personal dream to see a reset in terms of lending rates. So it's just my own personal commitment, not an official one. And I must say that we are on course so far. Someone this morning was telling us that his bank called him and invited him to apply for a loan at 15%. 15%. A year ago, you were talking about over 30%. And then it is significant to know that banks are now beginning to call clients and asking them if they needed any loans that they could come and apply. So there's a shift, going forward. Now, if I can go to the first one on the depreciation of the cedi, it is very much in line with the framework that we have. I mentioned that what we have is a managed floating system. What that means is that you allow the exchange rate to adjust to shocks. It's part of the process. The cedi must move up, but then it must move down. Our objective is to ensure that the volatilities are not excessive. And so don't get worried if you see the cedi moving a little bit. It is normal. A number of factors, impact the cedi at any time. There are short-term factors, uncertainty of any kind, speculative behaviors, some noise in the market. Those can just move the rate, not because anything is wrong. If those movements become persistent, then you might notice maybe factors such as high monetary growth. If that happens, that could also impact on the cedi. So what is happening currently, we believe is more of the short-term kind of, factors, uncertainty, etc. But it will fall in line. We are observing the trends. We are working. Our financial markets is on top of the job. We announced a number of reforms in the financial markets last year. This year, we are going ahead with further reforms. The interbank FX market is working better now. And so we believe that FX intermediation will become more fluid going forward. And so the cedi should be relatively stable going forward. Then the gold holdings, you're asking if it was sold for cash. It was sold for FX. It was sold for FX and it was invested. So it was invested, adding up to our reserves accumulation, and it is earning interest, therefore. And so rest assured, it's very much a part of our reserves accumulation. Then there was one question about selling dollars on the spot market, whether the allocation was based on the highest bidder or not. I would refer you to the head of the Financial Markets Department after the press conference. Those of you that are interested in how our auction system is working, Gershon, can you wave so they see you? After the press conference, I will encourage you to have a short session with Gershon. He will take you into the details. Then the Mozart's question, 14-day, around 14.5%, and whether our policy transmission is working. Well, very much so. Our policy is working. At the last MPC, we announced the introduction of the 14-day. We provided reasons why we decided to discontinue the use of the longer dated ones. And so far, by way of liquidity management, we think that the 14-day is working appropriately. We are reviewing, its performance. And so those instruments will continue to play a strong role in our liquidity management effort. But again, Mozart, if you want to discuss this further, you can join the same group, after the press statement. Mr. Gershon is ready to take you into greater detail. Now, Bernard, again, I believe that covers all the 5 questions, unless I left out something.
Yes, Dr. Yeah.
Okay.
Right. So we go to the next round of questions. This is the penultimate round. And after this, we take the last round. But before we do that, let me say that we have with us also the members of the Monetary Policy Committee here. And as you are very much aware, we submit their underlying reasons for whatever decision they came up with right after the MPC meeting as well. So you get to hear from them, but on paper. And also we have with us here the advisors to the governor. They are all part of this meeting. So please, let's go to the next round of questions. Yes.
Hello. Yeah. Good afternoon, Governor. My name is Francis Into. I work with the Ghana News Agency. I would want to know if all banks have met their capital requirement, considering the fact that regulatory forbearance has expired and capital adequacy ratio remaining at 17.5%. My second question is on the gold purchase program, the domestic gold purchase program. What pragmatic steps is the government, for that matter, the Bank of Ghana and its stakeholders, taking to reduce the cost that the country continues to incur? Thank you.
I am Ni Lati from 97.3 CTFM and Channel 1 Television. Governor, I just heard you say that the government is committed to recapitalizing the Bank of Ghana from time to time. I just want a bit of clarity here, because I know the finance minister has said that government is not going to bail out the Bank of Ghana, and that the central bank should find its own asset in recapitalizing and also restoring its balance sheet. So I just want to know if the government has changed its position, or what form and shape this particular recapitalization is going to take. Is it that government has changed its mind, or the Bank of Ghana is still going to find its own resources in recapitalize? I just want to know what the government stance is now. Thank you.
Thank you.
Okay, my name is Emmanuel Bruce from Reuters. Inflation is now 5.4%, which is lower than the central bank's target band. I want to find out if the central bank has any immediate plans of reviewing your inflation targets, and also what's your inflation target for the year. Secondly, the Financial Investment Trust, which is wholly controlled and owned by the BOG, owns the majority shares in ADB Bank. Government in the 2026 budget announced that it was going to recapitalize ADB. I want to find out what would this mean for the shareholding structure of ADB, and also when does the central bank plan to list those shares back on the stock exchange, because the continuous holding on to those shares makes the central bank a regulator and a player at the same time.
Right, so 5 questions. We'll come back for the last one. Dr.
I had 3, unless I missed some of them.
Okay, so there was the government recapitalization of the BOG,
yes,
which is a follow-up.
Okay, yes. So out of the 23 banks, we have about 21 of them meeting the capital, the levels that they were supposed to be at the end of December 2025. We have 2 more banks that are yet to meet it. But those banks have been given up to March, end of March 2026, to be able to meet it. And so largely we have made progress on the recapitalization strategy. We are monitoring to make sure that all banks are able to meet it by the end of March this year. Then the gold purchase program, what are we doing to reduce the cost? We've been having a number of meetings with the finance ministry. We are coming up with a number of reforms, as I mentioned when we went to Parliament. I mentioned that we'll hold consultations, and that is going on very actively. Hopefully very soon there will be information, there will be some communication on the way forward. So rest assured, as I explained, the domestic gold purchase program began somewhere in 2022. It was introduced as a crisis management framework. And so as any framework that is introduced in the midst of crisis, you would have to tweak, the framework. We had to close down some aspects. We have had to introduce, features, to strengthen risk management. We have had to reduce part of the cost. But it's about time we go further to reduce it even more. But we think that the G4R especially, it holds promise. Once we reform it, it should be able to support our reserve accumulation. And let me also mention that there's an audit that is ongoing on the gold for oil. Remember, we canceled the gold for oil early last year. We canceled the gold for oil. The gold for reserves is also going to be audited. And so rest assured, we will look into everything to make sure that the framework is streamlined. Then recapitalization of Bank of Ghana. So I mentioned that the Bank of Ghana Amendment Act was passed barely about a month or 2 ago, where it is stated there explicitly. And so I believe in the commitment of government. So far, we have had some fruitful discussions with government. They are going to help support, to repair the balance sheet of the central bank. Remember, it started from 2022 when the domestic debt exchange program, came in. The central bank had to take, a chunk of that task, all in an attempt to protect the country. And so it is only fair that the wounds you suffer as a result, you are helped to recover from those. And so rest assured, the central bank will be recapitalized. We'll make sure that we remain policy solvent. We'll make sure that we are able to carry out, our operations in line with our mandate. Then the last one, the medium-term target inflation, whether we will review it. So it is the medium-term target, the 8 plus and minus 2% is the medium-term target. It's true that currently we've gone below the lower end of the band, but it's early. It's too early, just about 2 months, development over the last 2 months. We want to observe these and to monitor inflationary dynamics so as to assess if it makes sense to lower the band or otherwise. So our eyes are on the ball. we are very much tracking, and evaluating the outlook for inflation. Now, ADB shares. ADB shares, currently we have barely about 10%, just around 9 point something percent. So those are residual shares we are holding. And under the fund program, we are supposed to sell off. So I can assure you that we are on that exercise. We have obtained board approval. Our own board has approved that we divest, our interest in those shares. And so very soon, hopefully, you'll hear some communication in that regard. It is true we are the regulator. We cannot be the regulated at the same time. And so that divestment is on course and it will be completed. So again, Bernard, I believe that is the end, unless I missed any.
Thank you very much. Yes, Governor. So I see a sharp rise in our current account balance from 1.5 to $9 billion from December 2024 to December 2025. You stated earlier that gold is one of the factors that drove it, which is good. But I want to find out whether we are going to sustain this huge jump or it's a one-off. My second is, in December, the IMF announced that it had approved the next tranche. Has it hit our accounts yet? Or when are we expecting it? Thank you.
Thank you very much, Mr. Governor. My name is Justice Aduboy. I report for the Xinhua News Agency. Two quick questions. The first one is, last week the Gold Board signed an agreement with Gold Coast Refinery. But I remember that the Bank of Ghana also had an agreement with Royal Gold Refinery, which the bank has some stakes in. So with this new kid on the block, what is the status of Royal Gold? Secondly, the IMF spoke about steadfast, in their last approval in December, they spoke about steadfast implementation of the policy reform so that, Ghana will fully restore macroeconomic stability. Now, can you maybe give us a glimpse of the phase of the implementation we are entering now? For instance, this year, as Ghana is thinking about, coming out of the program, what is the phase of the implementation we are entering now, which the IMF says is essential for fully achieving macroeconomic or restoring macroeconomic stability? Thank you.
All right. My name is Adnan Adams. I report for Economy Times newspaper. My first question is about the microfinance banks reform. And I know the reform was published, I think today or yesterday or so. The minimum capital for microfinance is now pegged at 100 million. And I want to know what is triggering such high minimum capital for microfinance institutions. And the second is with the non-interest banking regulation also in place. When are we expecting the first license to be issued? When for the windows and then the full-fledged banks? Thank you.
Okay. All right. I think we've had a number of questions, and we need Governor to look at them. So let's pause it here so that you can answer your questions. Thank you.
Okay. So again, the last one first on the non-interest banking program. We made a lot of progress since we announced it last year. Professor John Gachi is the main advisor that is driving that program. As you are aware, they've done a lot of consultation has taken place, guidelines have been published, but we are still open to further consultations. We want to get it right. As to how soon we'll see a license, we are getting some interest. A number of potential investors are writing to us. They are doing the necessary checks, here and there. And so we are optimistic that very soon we may be able to see a formal application for a license that we can review and take things forward. But let me emphasize that our doors are still open. If you have any views, anybody wants any clarity on any aspect of the program, our staff are ready to listen to you and to judge all together. Then the next one, still from the bottom, minimum capital for microfinance banks. So you may have heard that we've taken a decision to reform the microfinance rural banking sector. Why? Because you are aware of what that sector has gone through. It is a relevant, sector as far as financial intimidation is concerned. They have a role to play. And so we have no choice but to see what we can do to reform the sector. To give you an example, a number of years ago, they accounted for around 15% of the total assets of the, the banking, the financial sector, assets. Currently, that proportion is now less than half. And so clearly that tells you that, that the sector is on a decline. So that is why we've put together that, that program. The sensitization is ongoing. We still have different levels. So it's not just the microfinance banks. The capital levels for the community banks, for example, is lower than that. The idea is for them to be flexible, meeting the needs of different clients, taking on different projects, different risk projects, the risk profiles. And as you know, it goes with your capital levels. So that's the idea. The media will be sensitized. I believe some programs are already ongoing, Bernard. We've been having some programs on the new microfinance, reforms. It will be good to intensify those programs so that everyone appreciates what we want to do. And again, we welcome any consultations. We've been having groups coming in to try and judge with us, to try and understand it. Our staff are always, ready to help. Just send us a letter, and we are ready to take you through what we are planning. Now, on the gold refineries, yes, it is a good thing. Because we are basically a commodity exporting country. Our three main exports, gold, cocoa, oil. We have to be able to process a chunk of those. Because even with gold prices, someone was telling me this morning that in the 50s, they saw this type of rally in gold prices. But suddenly, it lost more than half of its value. So make no mistake to think that gold prices will remain above 5,000 forever. No. And so as a commodity, exporting country, you want to be able to increase the level of processing. His Excellency the President has spoken already about plans, to refine a greater amount of our, small scale, produced gold, etc. And of course, part of the large mines as well. So Gold Coast Refinery has gone ahead. We are aware of that agreement. Yes, we have a 20% stake in the other one. The other one is Royal Gold, yes. We have a 20% stake in them. We are committed to, move on with them. They have a strong role to play. And so later on, you hear about that refining agreement also being signed with Royal Gold, and we'll push ahead with that program. Then the tranche, the disbursement of the tranche, no, it came long ago. Usually those things don't delay. Once the board meeting is successful, a couple of days later, it reflects in our account. So that money is very much in our accounts long ago. Then current account balance, the fact that it has risen sharply, whether this will be a one-off. Did I miss something? The questioner, do you want to just repeat it for me?
How we are sustaining it, and whether it's a one-off thing.
Sure. So to a large extent, the surge, is driven by gold. And as I mentioned, it's for us to increase the processing. It's for us to rebalance going forward. And then it's for us to also look at other forms of exports. We were looking at the data yesterday. For example, the non-traditional export sector, that accounted for a little over around 10% of total exports, but then the ratio seems to be declining. That tells you that we need to step up our game in the area of non-traditional exports to rebalance. I remember during the discussions yesterday, I mentioned the issue of services. If you look at our services account, it's always been negative. Becomes permanent going forward. Bernard, did I leave anything out? I'm happy to.
Governor, that's exactly the number of questions that we asked.
Very well.
But looking at the faces of my constituents, especially our tree station, McBaron, he was about asking questions, but I couldn't join this round.
Very well.
So I would plead if you can take last 3 questions so that we can conclude it nicely. So McBaron.
But also, Bernard, maybe before we take the last 3 questions, remember we now publish the questions and answers. Some of the questions that came in, we receive written questions. It's not everyone who asks questions right during the press conference. Questions come in. So we answer all of these after the press conference and we publish it. So please go there, check other questions, get answers for your publications.
All right. So, Governor, thank you very much. This is a call, Bloomberg. After that, you can ask us. Governor, despite opting for the dynamic cash reserve ratio system, the ratio is still that it is only 1/3 of all deposits. So is the dynamic system failing? Would you amend it or do something about it? And we also have, me and you especially, debates as to whether or not we need bigger banks with deeper financial backing to support government's big push agenda and where the economy is heading. Of course, Tama Oil Refinery Rest will be asking for LCs and things. And sometimes government may want a long-term bond and what have you, and everything has to go outside. Think you not that we need that? Then I indulge a last one. The unintended consequence of the gains in the CD is that the likes of Cocoa Board is struggling. Today, cocoa prices have dropped, and cocoa prices are below even the farm gate prices farmers have been paid. To compound that, they are also suffering what we call FX losses. When they hike the price, we were doing 11.5 to $1. Now we're averaging 10.5. So Cocoa Board is reeling, and they've stopped purchasing cocoa. Do you think that there is scope to do some kind of a balancing? Because this unintended effect seems to be biting a section of the economy very hard. Governor, say something.
McBaron, you asked a question for the benefit of our UTV viewers, so please allow him. McBaron, you have the privilege of asking the last question of the first MPC of 2026. Thank you.
Thank you very much, sir. ECO wanted to take the sail out of the wind out of my sail with the Cocoa Board story. I've been following cocoa issues for a while now, and I realize the price is coming down, and the farmers on the ground are not getting what they are supposed to get. Probably that is not in your domain. But I wanted to find out how the drop in cocoa price is going to affect your economic projections for into the year. How is it going to affect it? And probably what advice do you have for the stakeholders in the industry? Well, some are suggesting that they want to reduce the prices. They've told their pieces to reduce the prices. What's your advice to them?
Thank you, Governor. That's the end of the round.
Okay, thank you very much. So again, I'll take the last one first. Will drop in cocoa prices affect you? Yes. Right. We like the inflows through, Cocoa Board. And so, yes, a drop in cocoa prices will affect us. We hope and we pray that the drop will be a transitory, phenomenon, and that somehow we will recover. Now, the issue about Cocoa Board and then the dynamics in terms of the exchange rate, it is real. And remember, I'm even on the Cocoa Board. I'm a member of the board of Cocoa Board. And so I'm very much aware of what is going on there. But the reality is that probably it's about time we looked at that model altogether again. Much as we will do our part to ensure that the exchange rate is well aligned, it's not overvalued, right? We will do all that. But I think it's about time we take another look at the entire model. But it's for government of Ghana to give you details about how to go about those. It's about time we take a look at it again to see the way forward. Then the dynamic cash reserve ratio. Yes, it was introduced some time ago. The objectives that were announced at the time was that it was to support greater lending, by the banks. And so you have different levels, etc. Last year, we announced that we're going to look at that framework, all over again. And if you remember, we started by, separating the, we made it now reserve requirement, based on the currency in which the deposit is kept. We are still committed to that, to those reforms. But because the transition involves or has impact for liquidity management, we had to adopt a cautious approach. And so going forward, we'll see how to, get on with that reform without compromising on our liquidity management, efforts. Now, the good part is that, as I mentioned, we've seen a recovery in private sector credit. We are beginning to see banks taking active steps to build their loan portfolios. They've started calling people, to come and apply for loans. That's the way to go. So that means that even when we eventually phase out those, reserve requirements, we will still be able to achieve the aim of greater loans, etc., which the framework sought to achieve in the first place. Do we need bigger banks? Now, the banking industry is like a market. So there's always freedom of entry and also freedom of exit. Bigger banks, there's something we call economies of scale. So yes, certainly, the bigger the bank, the more it's able to, to handle all kinds of projects, because it has the muscle. It has the risk management framework to be able to, handle those bigger ticket projects. So we encourage consolidation, and we encourage, any banks that want to merge with another to create a bigger bank. We have guidelines, to sort of help them to achieve that aim. So yes, we welcome bigger banks. If you have any proposals, our BSD people are always there to take you through. Then I spoke about the appreciation of CD, implication for Cocoa Board. Bernard, have I left any question out?
No.
I believe I've touched
you've touched on all of it.
Very, very well.
Yes,
very,
the
very
appreciation
well.
Cocoa Board.
We've answered all of them.
Two questions.
Right.
Right. So this is the 128th MPC press briefing, and we just heard the governor and the chairman of the 7-member committee, Dr. Johnson Pandit Esiaman, and we've also heard that the MPR rate is reduced by 250 basis points to 15.5%. So thank you, Governor. Thank you, members of the MPC. Dr. Zachary Mumini, First Deputy Governor. Second Deputy Governor, Mrs. Matilda Santie Siedu. Dr. Philip Aberdu, too, who is the head of our research team. And then the acting head of financial market, Geshon Ablezowu. And our external members, actually, who have taken it upon themselves to be part of our MPC meetings since last year. Professor Joshua Abo, can you give them a wave? And from the University of Ghana Business School, my alma mater. And Professor Ebo Texan is here from the University of Ghana as well, the economics department. And all the advisors here, Professor John Gachi, Dr. Francis Kuma, Mr. Franklin Benya, and of course, Mr. Eric Hammond, all of you, for being part of this meeting, and all the HODs here gathered. Now, going forward, the HODs, all the technical team members are available for further questions that you may have. And the Q&A will also be published. The transcript of this meeting will also be made available. And of course, we would want to hear more from the submissions of the members of the MPC and all that we made available. So this is the 128th MPC press briefing, and we sign off at this time. May we be upstanding as the members of the MPC and the governor leave us. Thank you.
Thank you. Oh boy. Bernard, the financial markets people, they can wait behind.
Thank you.